let's start off with your view on the sustainability of the run we've seen on the NSE over the last couple of weeks.
Well, yeah, I think the market has come up pretty strongly over the last 2 weeks. Last week it gained 6%, and I think that going forward into this week, we'll probably see the market movement moderate a bit. I think that will be as a result of profit taking. We've seen a bit of that more so towards the end of last week. And looking further ahead, I think the market obviously has several headwinds in front of the market right now. With the uncertainty in the banking sector in particular. But having said that, we still expect the market to rally a bit. It's down 20% year to date. We think at least before the close of the year, we should see the market about maybe minus 5% down.
I was saying just now how we've seen attention shift to banks' ability to build up their balance sheets once again. And with this, we've seen many banks making moves to raise additional funds, and this via the bond market. What have you made of this route that many of these banks are planning to take in the near future?
Well, I think we have to look at the reasons why they're doing this. First Bank, for instance, we've heard that the focus is more to fund infrastructure developments, and I think there is a case for that, using long-term money to fund long-term projects. Looking at the balance sheets of most banks, you'll see that many of them are significantly funded by short-term money. And beyond that, I think there's also the case for reducing the cost of capital for banks. Cost of equity right now, we're looking at it well over 20%. And I think that some banks should be able to raise money at significantly lower levels than that. So there is a case for raising bonds now, I think.
Well, certainly this has been prompted by the fact that we've got many banks feeling that they're lagging behind to meeting necessary requirements for funds. What kind of consolidation activity, if any, are you anticipating in this period?
Well, I think consolidation could be driven by several factors. One, obviously, is the pressure that many banks are facing right now with regards to liquidity. And I think the more liquid banks will be in a better position to probably acquire or merge with the ones that are less liquid. So over the next 6 months, I think, depending on to the extent that the CBN can intervene in the market with its policies, several banks will certainly still be under pressure, and that might make a case for this consolidation that we expect. Beyond that, I think there will be more strategic factors, i.e. regional plays, looking at banks that are somewhat niche players looking to expand their scope. So there are several factors that could drive this, but definitely we expect consolidation.
Well, we just last week saw Oceanic Bank out with the first half numbers, and looking at provisioning that's been made there, I mean, adding to the 42 billion naira worth of provisioning we saw for the full year last year, we've got 2 billion naira being added this time round. What did you make of those numbers?
Well, the provisioning figure is less. That's somewhat encouraging. However, I think we still need to hear a lot more from Oceanic. First of all, I think this is a wound, and I think obviously we're seeing the impact of that. But what is the plan to heal that wound, i.e. looking at the risk management framework of the bank? I think we need to hear a lot more as to the changes that may have taken place since the results were released, or maybe before those results were released. But beyond that, looking at the numbers, first of all, I think it's important to note that the numbers are not comparing like for like. The period that is being referenced, because of the change of the financial year end for the previous year, is not the same as what we're seeing, i.e. We're looking at January to June this year, but we're looking at September to March in the previous comparative period. But be that as may, I think the trend is in line with what we've seen in several other banks. We've seen the loan book come down significantly. We've seen deposits shrink. And I think we need to hear a lot more from Oceanic with regards to deposits as well. There's a view that Oceanic is significantly exposed to the public sector. To what extent has that impacted on their deposits? Because looking at the numbers, we see deposit coming down about 200 billion from December 08 to June 09. So I think we need to hear a lot more from Oceanic.
Well, we'll be chatting to the company's head of international markets a little later on this afternoon on Power Lunch. Is there any major question mark that needs addressing in your opinion? What would your question be for the company right now?
I think the things that I've highlighted, risk management, what is the strategy, what changes have been made. We need to hear a lot more about that. And then also the pressure that we've seen on their deposits. To what extent is that a function of public sector exposure? And what is the strategy to beef that up, looking at the impact that, of course, considering the impact that that would have on their loans to deposit ratio?
Okay, well, hopefully we'll be getting some clarity on those fronts a little later on in Power Lunch this afternoon. Well, we've been so focused on the banking sector of late that on Friday we started looking at some of the other companies operating in other sectors that are gaining attention as well. We started off with Dangote Sugar, but also under that Dangote Group umbrella sits a Benue Cement company, and ever so often it's been ranking on the gainer board. We saw the company release results last week. What's your view on Benue Cement at the moment?
Well, the results were surprisingly good. Should I say they beat expectations? We were expecting a much improved result, but the growth has been somewhat phenomenal, if you ask me. We've seen margins up, profit margins up to about 50% compared to 28% in the previous year. That, to a large extent, is a reflection of the increased capacity of the company. And perhaps maybe the impact of a tax break as well. So we are surprised at the performance, but not too surprised, if I should say, because, like I said, this is on the back of significant expansion in their capacity. So going forward, I think BCC is one of the best performers this year, and I think that's been due to the expectation of this increased capacity and improved results. Going forward, I think the upside is somewhat limited, though.
Well, how does that compare to a company like Webco? I mean, we know that this is a company that's been highly sought after by value hunters in particular, and it was a company that also released figures last week.
Well, the results were moderate, and that is not too surprising given the expansion program that Webco has embarked on. And of course, the pressure that financing that expansion would have on their bottom line. Profits were up moderately, and but however, we think that looking at the valuations, P/E ratio is still very low. It looks attractive for long-term investors to me.